Hi, everyone. Welcome back for the performance snapshot of the HFRX in February 2025. With us today is Ken Hines, president of HFR Index. Welcome back, Ken.
Thanks for having me on, Anika.
So walk us through February.
It was a volatile month for sure. And really building on the previous commentary, we saw a significant reversal of some of the trends in December and January. And we saw the reversal accelerate into the latter part of the year. The financial market trading in the last week of February and has continued into March has been totally an acceleration of the trends regarding trade and tariff and the uncertainty that this represents to financial markets. The good news is that hedge funds have done a good job of navigating that uncertainty, and we've seen strong performance in the first couple months of the year with all this heightened volatility and uncertainty.
Okay, so let's look at the data for the month of February at the composite level.
You can see that we have here the NASDAQ down about 4% for the month. And really a lot of that really mostly happened in the last week of the month. You saw large cap technology, which has been the strongest performer going back as far as I can remember, really a couple of years, really see a significant reversal that accelerated a month end, still going on in March. And what we see here is that we have gains in fixed income based strategies. We have here the HFRX Relative Value Index up about 0.75% for the month, which it's certainly not unreasonable given the fact that associated with all this uncertainty, we did see falling bond yields at that time. So gain for fixed income based strategies, 0.75%, about the same for the HFRX macro, which, as you know, we usually refer to as uncorrelated strategies. In this case, they were negatively correlated with declines in equities, which is always a good thing, about 70 basis point gain there. Event driven, which is certainly impacted by the volatility that we've seen going on in February. Hedge funds in the event driven space posted a gain of about 0.5%. We can see here the HFRX event driven index up 46. And then the overall global, which is all four strategy areas, a gain of about 1/3% here. We see 28 basis points to be exact. And then the only of the four strategy areas which declined in February was equity hedge, and that declined by about 0.5%. Again, well ahead of the decline of nearly 4% that we see in the NASDAQ for the month of February.
Great. And at the sub-strategy level, Ken, what stood out?
Yeah, similar story there. Really, kind of building on the previous comments, the macro discretionary thematic, which are fundamental macro strategies, not CTA and commodity trend following quantitative things, but fundamental with a trading team that's going long and short across the different asset classes. You can see that gained about 2.1% for the month of February, which is a very strong gain in a month when you saw equities decline as much as they did. Similarly, the credit multi-strategies in the RV multi-strategy index gained about 0.8%. So as bond yields fell and equities fell sharply, you saw a gain in those arbitrage-oriented fixed income strategies. And then to my earlier comment, merger arbitrage navigating through the uncertainty and volatility with a gain of about 0.75% for the month. And then finally, fundamental value, which is kind of at the other end of the spectrum from the large cap technology when you have more deep value financial or industrial names, things like that. Those certainly have been impacted by the tariff trade uncertainty. But in this case, the managers in the space posted a gain of about 0.5% for the month, a little better than that for the month of February, while all of this trade tariff uncertainty was accelerating. And really the area that was most impacted being growth and technology and certainly crypto areas. And those areas obviously not the focus of the four leading sub-strategy areas you see here.
So 2 months into the year, how does performance look at the composite level?
You see gains across all four strategy areas when we've actually moved from a strong gain in equities to start the year to a decline of about 2.5% Relative value is the leading area of performance, that being fixed income based arbitrage strategies. About a little better than 1.6% gain there, a little better than 1.5% for the HFRX equity hedge. For the HFRX global overall, a gain of 1.3%, which again compares very favorably to the performance we've seen in equities in the first 2 months of the year. 1.12 for event driven. Again, tremendous amount of volatility, but people still, I think, very optimistic on the outlook for M&A coming into the year. And then finally, you have macro, a gain of about 0.5%. So all four strategies in the composite well ahead of the decline we've seen in equities thus far in 2025.
And does that hold up at the sub-strategy level?
It does, actually. It very much holds up. Fundamental value, which again is kind of the opposite end of the spectrum from the large cap technologies that have experienced the worst of this accelerating equity market reversal. More financials, industrials, utilities, things like that. Those have actually shown a gain of 2.5%. So managers in that area doing a very good job of navigating this volatility. Similarly, merger arb, 2.1% gain in the first 2 months of the year. That's strong. Nearly 2% in macro discretionary thematic. We talked about that earlier. That's really the leading area in the month of February as the volatility is really accelerated in the month end. And then convertible arbitrage, which again wasn't a leading area in February, but when you consider the 2 months together, gain of 1.75%. And again, convertible arbitrage is generally short equities, long bonds, which makes sense that that's done well, and certainly long volatility, which we've seen that increase over the course of the latter part of February. So it's been a tricky trade for everyone with this accelerating volatility. And I think the managers have done a good job of navigating this uptick in volatility that we've seen recently.
Excellent. Thank you. And we'd like everyone to visit our website, download the HFR Investor Guidebooks, check out our video library. HFR Media has an extensive library on our website. And if you have inquiries for the index department, you can email indexdata@hfr.com or reach out to Ken Hines directly. Thank you, Ken.
Thanks, Anika.